What's up guys, and welcome back to Wall Street Millennial. On this channel, we cover all things stocks and investing. Today we're going to go over some of the greatest gains and losses on the WallstreetBets forum of the past week so we can learn from other traders' experiences. If you like these videos, make sure to smash that like button and subscribe to the channel so you don't miss our future uploads. Also feel free to join our new Discord server, just click the link in the description below, it's completely free. Alright, let's get into the first fail. First off, we have user Stonk Raider, who has experienced a minor setback in his investing career. He started investing in 2020 with a starting capital of about $7,000. Since then, he has lost 101.47% of his portfolio value and now has a balance of negative $108. He initially made some tendies on VBI Vaccines, a vaccine penny stock that benefited from the pandemic. But he didn't take profits and gave up this gain. He then briefly bought into Tesla and a few other high-growth names. Although Tesla stock has had a great year in 2020, he didn't buy in at the optimal time and only held for about a month, incurring a small loss on the position. He then bought into Viracta Therapeutics, a volatile pharmaceutical penny stock that tanked more than 50% shortly after he bought it. By this point, he was down more than 50% and needed a way to turn things around. And there's no better way to do this than buying meme stock FDs. He did some due diligence and found out about a Nigerian company called Jumia that promises to become the Amazon of Africa. So he went all in, buying calls on Jumia right as the stock soared more than 600%. This was a huge win, and he recovered all of his losses with his portfolio exceeding his initial value of $7,000. Instead of taking profits, he diamond hands the position, hoping for even more gains. Unfortunately, Jumia was hit hard by the recent tech sell-off and declined more than 45% from the highs. This caused his calls to expire worthless, and he lost everything. His portfolio now shows a 101% loss and a negative balance of $108. The negative buying power in his account is probably the result of him playing option spreads. If the short leg of an option is assigned prior to the expiration date, Robinhood pays out this liability and your buying power appears to be negative. But once the long leg is unwound, this will be corrected and the buying power will no longer be negative. So he likely doesn't actually have a negative balance, but it's safe to say he will be left with pretty much $0 left once all of his positions are unwound. Next up, we have user Floverforce, who is down 26% or a whopping $50,000 in 1 week alone after YOLOing his entire portfolio value into a single stock. He owns almost 3,000 shares of Pinduoduo, ticker symbol PDD, which makes up 100% of his portfolio. Pinduoduo is a Chinese e-commerce company that has been one of the biggest beneficiaries of the pandemic, with the stock increasing 380% to a high of $196. But the share price seems to have gotten ahead of itself and has declined more than 30% in the recent tech sell-off. The conventional wisdom is that a diversified portfolio is superior to a portfolio made up of entirely one stock. This is because the diversification reduces the overall variance of the portfolio and makes large drawdowns less likely. However, if you have a very high conviction in a stock, you expect its returns to far exceed the returns of any other potential investment. So if you are willing to take on the risk, it can make sense to go all in. The OP is a long-term bull on PDD, and while he admits that the valuation of 16 times sales is lofty, he is confident that the company will excel in the long term because of their unique product offering and vision. Pinduoduo differentiates itself from its competitors by offering cheap prices and an interactive social platform. It allows users to band together as a group and buy large quantities of products to obtain a bulk discount. For example, 2.5 kilograms of Fuji apples would normally cost 26 yuan, but if you buy as a group, you can get the bulk discount, which is only 22 yuans. The Pinduoduo app also has a social media function where users can play in-app games that are integrated with product promotions. This encourages user interaction and engagement, driving more sales. And while it never feels good to incur a $50,000 loss, this WallstreetBets user can take comfort in the fact that he bought stocks instead of calls. If he holds for the long term, he could still end up in the green if the stock price recovers. If you would like to see an in-depth DD video on Pinduoduo, let us know in the comments section below. Next off, we have user Thatera Guy, who has had a rough past month in the stock market, having lost 53% or more than $19,000. He incurred most of his losses playing calls on meme stocks including GameStop, Rocket Companies, AMC, and United Wholesale Mortgage. He owned 215 strike GameStop calls expiring on March 26th. As of March 25th, shares were only trading at $167 a share, even after a 40% run-up on the day. This means that shares would have to increase another 28% on the next day to expire in the money. While this would be a big move for a normal stock, given GameStop's volatility, it's actually possible that this could happen. He also owns 26 and 59 strike calls on Rocket Companies expiring March 26th. While the 26 strike call is only 16% out of the money, Rocket Companies is not nearly as volatile as GameStop, so the chances of expiring in the money are near zero. His most hopeful position is $10 strike calls on United Wholesale Mortgage, which are 23% out of the money but don't expire until April 16th, which is almost a month away. The combination of these losses has caused his gut-wrenching 53% decline in portfolio value. Fellow WallStreetBets users give some pretty helpful advice in the comments section. They explain his portfolio went down so quickly because he mainly bought FDs. A much safer way to play options is with farther out expiries so that the underlying stock price has more time to appreciate. And if you really have long-term conviction on a stock, it is often the best strategy to just buy shares so you can hold on indefinitely, and as long as the fundamentals of the business are sound, the stock price will eventually go up. Quick pause, Public is going to be giving you a free stock worth up to $50 when you click the link in the description below. It's a free trading app and they don't sell your order flow to market makers like Robinhood does. Next we have user Twilight MD, who posted a very admirable 1-year performance of his investing portfolio. His main plays are on GameStop, Disney, and Rocket Mortgage. On his Robinhood portfolio, he is up 214% on the year, for a $20,000 gain. Although his investing was consistently profitable throughout the entire year, it seems like most of his gains came in the past couple months. Because of this, we can probably conclude that he made a lot of money on the GameStop short squeeze. However, he made more money on his second account, which is up more than $60,000. He started with only $3,000 or $4,000 in that account, and it is now worth $68,500. That's a 20x return. On this account, most of the gains appear to have been from about 8 months ago. Since then, the portfolio has been more or less flat. It seems that he has separated 2 different investing styles in this account and the Robinhood one, as they seem to be relatively uncorrelated with each other, except for the fact that they are both major winners. He says that his major positions are GameStop, Disney, and Rocket Mortgage. It is unclear whether he is still long those names. Congratulations on your successful year of investing. Next up, we have a 5-figure gain on SPY puts. User Messenger911 bought weekly puts on the SPY expiring on March 24th at a $390 strike price. He asked if he has gone mentally disabled for putting tens of thousands of dollars into SPY puts that expire in one day. Needless to say, the SPY has not been having a very good past week, with some investors fearing that the historic bull run of the past year has finally lost its steam. The SPY is currently trading at around $387.78, which is about 0.5% below the OP's strike price. However, somehow he was able to sell for a $52,000 gain, or more than 400%. The comments are not exactly angry for the OP being a rainbow bear, but they overwhelmingly support the OP cashing out of his short position. They say to cash out now and run with the money, and don't actually be mentally handicapped. User The Sky Prod says that only losers don't cash out any money and not to let greed take over. By taking profits now, the OP could try to let those gains compound over and over on future plays. However, there's a lone supporter in Mono Red Fairies. He says that he may be the only one supporting the OP's stupidity, and that the OP should let it ride. What do you guys think this person should do from here? Let us know in the comments section below. It seems that a disturbingly high proportion of the gains this week are being made from shady means. Our next post is from user Wiser129, and he made his gains by holding puts on Rocket Companies. After Rocket Companies' mini short squeeze a month ago, it has bled out all of its gains, despite the WallStreetBets 8 movement trying to prevent that from happening. This trader predicted the fall of Rocket Companies and continually bought weekly puts, which he says have all been profitable for him. Although he claims to like Rocket as a company and long-term investment, he also says that he thinks the stock is doomed and just wants to make some tendies for himself. His most recent play was 125 contracts of $25 puts, expiring on March 26th, which have increased in value by 45%. On this play alone, he has made a quick $8,000. However, Rocket Companies isn't the only target of this shorting WallStreetBets user. He also has made significant returns by holding calls on Roblox. Roblox is a recently IPO'd video game platform, and despite poor performance in the past week or so, has rebounded today to the tune of about 4%. Based on the OP's impeccable timing of the market, he was able to leverage this price action to make $7,500, or 58% on some calls. He bought 100 contracts of $72 strike calls expiring on March 26th, which are now worth $20,500 total. It would have been nice if he could have made his Rocket Companies gains also by buying calls rather than puts, but in any case, you have to respect the gains. Alright guys, that wraps it up for this video. If you like the content, make sure to hit that like button and subscribe for future content. Also, check us out on TikTok and Instagram, and make sure to subscribe to our second channel, WSM Research. If you haven't already, join our Discord server where we talk about all things stocks in the markets. As always, thank you so much for watching and we'll see you in the next video. Wall Street Millennial, signing out.